The big four banks are cutting fees in an area which is already shrinking. The Reserve Bank says ATM use is at a 15-year low. That's despite there being 26% more machines over the past decade. Consumers are turning to other forms of payment, but more often than not, there are fees connected to those as well. Australia's big four banks will take a hit by eliminating ATM fees.
It's estimated they collect around $500 to $600 million each year from ATM transfer fees. Of that, they make about $100 million profit. So that's not going to be significant.
Representing less than 1% of their profitability. Some politicians are questioning how the decision was made.
One bank says we ought to do it, the others fall in line. When they put their bank rates up or down, it takes them days to sort it all out.
But the government won't pursue a royal commission into the sector.
We're fixing accountability, we're fixing access to people having their claims heard and dealt with in a fast fashion. We've dealt with increased powers and resources for ASIC. I mean, we're just getting on with it.
Despite the reprieve, Australians still shell out $4.4 billion in bank fees every year.
There's home loan fees, transaction account fees, there's superannuation fees, there's fees for even overdrawing your account.
Credit card fees top the list, earning banks more than $1.5 billion last financial year, and it's rising.
And that's because there's an ongoing annual fee and it can climb as high as $1,200.
The Reserve Bank has taken action recently by reducing interchange fees, but consumer advocates want more.
Australians use tap and go more than almost anyone else in the planet, yet you can be subject for fees for that. It's quite ridiculous. We really need fee-free payment systems right around the block and for all the other technologies that are coming too.
And speaking of the Reserve Bank, economists at Westpac say the RBA board won't be lifting rates this year, next year, or the year after that because of slowing economic growth, cooling property markets, weak inflation and a softening China.